and thanks for tuning in to what promises to be an interesting session discussing the MGA market. The MGA market has played an important role in the insurance value chain. Insurers have long delegated underwriting authority to MGAs, MGUs, and cover holders in some fashion or other to access niche markets, utilize and test underwriting technology, while giving them the ability to flex premiums and pricing depending on market conditions. In a nod to the importance of the market, AM Best has recently released a new opinion type, the Performance Assessment for Delegated Underwriting Authority Enterprises, or DUAEs. Throughout the discussion today, we may interchange the terms MGA, MGU, and DUAE. Today we're going to talk about this exciting market and how developments in innovation and talent are changing operational attitudes towards the market, and a review of AM Best's recently released criteria. I am Andrea Keenan, Chief Strategy Officer at AM Best. I have the pleasure of discussing these and other developments in the MGA market with three esteemed panelists. We will meet the panelists in a moment. We may mention the subject of financial strength ratings and performance assessments. Full explanation of our ratings is available online at ambest.com/terms. The opinions expressed by our panelists are theirs and not necessarily reflect the opinions of AM Best. First, I would like to welcome Corey Schilling. Corey is a Senior Managing Director and Head of the MGA and Program Practice Group at Aon, where he leads the management strategy and business development responsibilities. Corey has been in the insurance industry for more than 25 years and brings a rich perspective of the current opportunities and challenges in the MGA market space. Second, I would like to welcome Greg Williams. Greg is a Senior Director in the Rating Analytics Division at AM Best and is a seasoned insurance professional with more than 15 years of ratings agency experience evaluating the creditworthiness and financial strength of insurance companies. He will be leading the team that's conducting Best Performance Assessment for the Delegated Underwriting Authority Enterprises, which is a comprehensive analysis consisting of a quantitative and qualitative assessment of underwriting capabilities, governance and internal controls, financial condition, organizational talent, and depth and breadth of relationships. And finally, I would like to welcome David Blades. David is an Associate Director within the Research and Analytics Department of AM Best. David has been with AM Best for more than 20 years and has solid experiences in the rating division as an analyst and in the research department examining key issues in the insurance sector. Prior to AM Best, David began his career as a commercial lines underwriter with Chubb, Travelers, and Aetna. Now, Corey, scanning the list of attendees, we have a diverse one ranging from insurers, regulators, brokers, trainees, management, and executives. Just to get everybody on the same page, could you define what may be what we mean by MGA and Delegated Underwriting Authority?
Yeah, thanks, Andrea, and thanks so much for allowing me to be here today. I look forward to talking with you and the others and sharing some market insights with you all. But your question, it's a great question. I think there are lots of terms out there defining MGAs and delegated underwriting authorities. Others may use a term such as program administrator or MGU. But in our work, we tend to group them all together and think of MGAs as a managing agent or broker that has underwriting authority from an insurer. So MGAs provide the management and appointment of agents, that is the distribution, and can also perform rating and pricing, underwriting, claims handling, portfolio analytics, and more. So really depending on the size of the MGA, and many that Aon work with, you can almost consider them like an insurance company without a risk-bearing balance sheet. So with the insurer's authority, the MGA can provide really every function that an insurer typically would. All that said, and what sometimes gets lost though, is that it's really a partnership between the MGA and the carrier. It has to be a true partnership that delivers value for each other. It's founded on sustainable and profitable growth, and also focuses on access to a certain product, a distribution source, a technology, or some other sort of specialization.
Thanks, Corey. That sets the stage very well. Now, David, could you start us off with a quick summary of the MGA report and the notable highlights that we identify as we examined the MGA market segment?
Absolutely, Andrea. And I think I'll try and do this relatively quickly, but I think it's important to note the underlying theme of everything that we're kind of talking about today, and the reason why AM Best, we have a report coming out about DUAEs in addition to the performance assessment, is that DUAEs have become an increasingly impactful and important component of the overall insurance industry. And we've seen that over the last several years. And I think from that standpoint, that's why we focused for a few years on doing the research and ultimately in coming out with the performance assessment, because of how impactful they've been in helping companies and helping the insurers and reinsurers that they partner with better achieve their overall strategic goals. In terms of diversification, the specialty expertise of DUAEs has been critical to helping companies not only achieve better premium growth, because companies have long been trying different ways to generate organic premium growth, and mixing in and partnering with DUAEs has been one of the ways that they've been able to achieve this. But it's also helped these companies achieve their overall operational and strategic goals. Among some of the key benefits that we outline and the key strategic benefits that we outline in our report with regards to the DUAEs is the expertise that they bring in terms of risk class, the types of business and the different risk classes, particularly those that might be more difficult and present more risk to the insurers. Their ability to understand those risk classes and to bring insurance solutions, partnering with insurers and reinsurers, has been critical to their importance to the overall marketplace and their growing impact in the market. The UAEs also have product line expertise, and again, it's very difficult across some different jurisdictions, different product lines, create or have different overall risk profiles. So understanding different product lines and the expertise that they bring to the table, again, has helped companies that have reassessed their overall risk appetite partner with these entities and utilize the expertise that they bring to the table to accomplish mutually beneficial goals. They also have geographic expertise in addition to overall niche market relationships. And I think that's one of the things that has long been lauded with regards to MGAs and DUAEs overall, has been the niche market relationships that they have, not only the knowledge and expertise, but the relationships that they can bring to the table, so that they're bringing these opportunities to their insurers and reinsurers in terms of growth, and in terms of being able to put forth insurance solutions that really handle the needs of these entities. So I think, again, the mutually beneficial relationship that we see, I think has been very important from that perspective. Some of the other key observations that we make in our report, we note the fact that the hardening market, particularly for certain distressed, if you will, commercial lines of coverage, commercial auto, general liability, and in particular some of the professional liability lines of coverage, the hardening environment for some of those commercial lines has aided in the premium growth for MGAs, because again, a lot of those MGAs have specialty expertise in those areas, and so the fact that rates and overall pricing has been going up for some of those lines of business has helped MGA generated premium also be on an upward trend, and that's something that we definitely note in the report. Another observation that we make, and this is particular for newer MGAs, is that a lot of them tend to have be very technologically advanced, and so that expertise that they're bringing to the table with different digital processes and ways to access markets that insurance companies have had a tough time accessing from a distribution perspective, bringing that to the table has also enhanced, again, the mutually beneficial aspect of the relationship, and from the standpoint of also being able to be efficient in operating with their insurers and reinsurers to help not only grow premium for the MGAs, but also grow premiums for the insurer and reinsurer and do it in a way that it adds to bottom line profitability. One of the things that we mentioned in the report is obvious that for the long-term mutual benefit of these relationships that the DUAEs have with their insurance and reinsurance partners, there has to be profitability, though. They have to, add to the profitability of these companies for those programs and for those relationships to stand the test of time. And that's something, again, that we highlight in the report. Like I said, from a carrier perspective, it's also imperative that the relationships with the MGAs have the kind of transparency that allows the level of monitoring that's needed from the insurance company perspective in terms of the authority that they're delegating to these entities, whether it be underwriting authority, whether it be binding authority, claims handling authority. These are important aspects of handling the overall books of business. And so the fact that these relationships are set up and are transparent enough to allow the insurance and reinsurance partners to monitor and to make sure that the delegated authority is being handled effectively and in accordance with what their expectations are, that is also very critical from the standpoint of, again, the benefit that we see DUAEs bringing to the marketplace. Last couple of things I'll bring out are just kind of to show in this slide here, just the general premium trend that we've seen in terms of premium produced by managing general agents. And the key thing that I have to point out here is that you can look at the premium totals here as basically the lowest estimate or almost the floor in terms of the premium that's generated by these entities, because in terms of trying to aggregate this information, what we have to do is, and what we're beholden to doing, is looking at the annual statement, the annual NAIC statement that's filed by the rated universe of companies that we follow. And in note 19 of those statements, they provide only the premiums that are MGA generated that meet a threshold of 5% or more of policyholder surplus for that company. So any MGAs, and there are numerous MGAs that fall somewhere below that 5% threshold, that premium is not captured in these aggregated totals. So that's why, again, I say we look at this as a floor rather than anywhere close to a ceiling. But again, the key thing in looking at this slide is that the trend has been going up. And again, I do think that's in part to the market conditions. And again, for some of the specialty commercial lines and programs that are focused on those lines or on those classes where premiums have been trending up. But it's also because there have been newer MGAs generating and developing relationships with insurers and reinsurers. And that's another thing that's been driving the premium upward. This next slide, again, shows the same premium totals, but you see, from an affiliated, we show the split between unaffiliated and affiliated companies. And, what we saw in the most recent year that we've aggregated, 2020, you see that the affiliated premiums trended upward. And I think what that shows is, again, in the drive for organic premium growth, companies have been, either acquiring MGAs, MGUs, in order to drive that premium growth. And so you see that reflected to some degree in the trend with regards to affiliated premiums increasing. And I think that's something that we might see continue to trend in that direction. We also talk in the report about M&A interest being high for distributors as a whole. So that's insurance agents and brokers as a whole, and in particular for a lot of the specialty MGAs that we looked at in researching this overall subject in this marketplace. M&A interest has been very high for the distributors. And again, the numbers that you see on this slide, that includes the smallest of deals. So there might only be a handful that really, make the leading insurance magazines, but it just shows that there are a number of transactions and a lot of interest in terms of whether it's private equity, whether it's in terms of, from a company standpoint, or whether it's in terms of insurtech, a lot of interest in terms of trying to get into this space and benefit from what specialty MGAs bring to the table. So those are some of the key things that we've talked about and that we highlight in the report that will be coming out shortly.
Thanks, David. There's clearly so much to study in this space, and as we are talking about reports, Aon publishes regularly on the MGA market. Corey, is our report consistent with what you've put out, and what you would like to and what would you like to highlight as the key issues here?
Yeah, it's interesting. So we're actually providing our annual report very soon as well, and it's really generally in line with your work. So our themes and takeaways are very similar, and without a doubt, Aon continues to invest in this space as we feel that the MGAs are a key part of the overall insurance market. I think we can also easily agree that actually obtaining the exact facts and results on MGAs from current available resources is really difficult. So we have our methodologies, and much of that comes from our knowledge and actually surveying individual MGAs. But from a total US market perspective, our numbers are a bit higher. We're currently thinking that the MGA market is around $60 to $65 billion of written premium. And again, this is driven by both additional public information and some of our own market insights. As an example, Aon tracks the 25 largest unaffiliated MGAs in the US market, and these currently make up over $20 billion of written premiums. So I think generally we're very much in line, but very similar takeaways on the importance and growth of this marketplace.
Thank you. And Corey, if I could stick with you for just a moment and talk about the importance of talent. Brian Finlay, the head of TransRe, had mentioned in a D&O webinar with AM Best about MGAs in the casualty space. Now, he said the talent coming into the MGA market and the experience that is coming in is vastly superior to the pool that was, say, in 2001. These are experienced underwriters who are coming into the MGA space, wanting to manage a portfolio. What are your thoughts on talent in general in the MGA market?
Sure. Yeah. I think just like really every industry right out there right now, talent is just a large consideration and factor. But we find interesting is to us, there's just a significant flow of talent into the MGA marketplace. And we've seen talent from both the tech industry as well as from traditional insurance carriers who are going into the MGA market. And we think we'll continue to see this. We'll talk more about the InsurTechs in a little bit. But what has been interesting are the underwriters at carriers entering the MGA market. And this truly is the case for, lines of business that tend to be, a larger account size, maybe more hands-on underwriting, maybe a business that commands relationships with certain distribution sources. So to a large extent, the development of what we call MGA platform or MGA front platforms have really established this trend. So as an alternative to buying an MGA, as we just described a little bit ago, for example, entities are establishing these platforms to easily insert like a key person or a team and really provide them, turnkey MGA capabilities such as, systems, policy administration. It could be HR, licensing, shared business services, even buying pencils. But some of these platforms, even may or may not provide equity. They may have direct profit sharing. They may even have risk-taking features, and in some cases like paper or capacity or captives. But the MGA market really is attracting entrepreneurs that we feel that have self-beliefs in their success, and I think we'll continue to see this talent migration.
Thank you. Even buying pencils. That's interesting. Greg, I apologize for making you wait so long. Could you please, we could switch gears for a moment so you could talk about AM Best performance assessment and how organizational talent fits into our assessments.
Sure, no problem. Yeah, so I think before we address the organizational talent, maybe we just go with the overall framework and then discuss how organizational talent fits into that. So the performance assessment is based on 5 key components. You can see those on a graphic here, starting with underwriting capabilities, governance and internal controls, financial condition, organizational talent, and depth of and breadth of relationships. So what takes place is analysts will analyze these various components, and you can see the first 3, underwriting capabilities, governance, internal controls, and financial condition. DUAs can score up to 10 points in steps of 2. With organizational talent and depth and breadth of relationships, you have a maximum of 5 points in steps of 1. You add those up to get to an overall sum. And again, what we try to do on the next slide is just break it down. So once you add all the elements up, the key components, you get to an assessment range. Anywhere from 34 to 40 translates to an exceptional assessment, or PA1. You can see it goes down a line down to up to 12 points, which is weak and considered a PA5. And again, the PA scale really outlines the DUAE's relative ability to perform services on behalf of its insurance partners. What we want to see, an alignment of interest. I think both David and Corey have talked about the alignment of interest being key. That's what we're looking for in the performance assessment as well. Get into the underwriting expertise, the financial performance indicators, talk about governance, internal controls, and the strength of distribution and management expertise. All that factors into the overall performance assessment. Now again, looping back to the original question around organizational talent, there's a number of factors or elements that we take a look at when trying to assess organizational talent. Corey's comments around what we're seeing externally matches to what we've seen in the industry as well. But when we take a look at analyzing organizational talent for DUAE, there's a few elements, as I said, and what we're looking for is relativity to size and complexity. We understand this is not going to be a one-size-fits-all operation. Maybe when you have a larger DUAE with multiple programs, maybe longer tail lines, there's going to be more complexity there. The need for actuaries may or may not come into play. But when you're dealing with maybe a one state or one line DUAE, which is really niche, they might not need the same type of staffing, might not need the same technology. So again, it's not going to be a one-size-fits-all element. So I think that's key to framing that conversation when we talk about organizational talent. Some other things that we measure and talk to management teams at DUAs about is tenure. How long has employees been with your company or with your DUAE? How long have they been in the industry? To the point, a lot of these the talent might be leaving insurance companies going into the MGA. So not only how long they've been with the DUAs, but where's the talent been before? And is there a track record that we can go to see how these individuals, whether it be underwriters, how the results have fared over a longer period of time? What type of training DUAs have internally? Now, again, as I said, this could you're dealing with small versus large, so the amount of training programs will vary. The level of training programs will vary. Maybe some outsource for some of the programs, where others are internally developed. We get into those conversations around organizational talent. I think this training programs have probably become even more important with the onset of COVID-19, as people may not be in the office. So there is the need for intense training, where you would get that in the office, learn on the job from the person next to you. You don't have that ability right now in a number of cases. It may be coming back, but for a period of time there, it wasn't. So I think we've gotten into conversations around that type of training. Management expertise, again, something that we've talked about. And then organizational structure. How is the DUA structured from an organizational standpoint? The relationships, who reports to who, why is it done in that way? And again, as I mentioned, this is not a one-size-fits-all. We know the differences that exist in the market today. And so it really is trying to understand how management approaches certain areas and how the organizational structure is developed to capture the benefits that can be derived from the DUAE.
Greg, for all of the positive developments in the market, we still have vivid memories of insurance companies having problems because of workers' compensation and Unicover. How does AM Best take into account quality of underwriting issues?
I don't think we want to paint a rosy picture here, because there's still some of the elements that have maybe plagued the MGA industry over 20 years ago. There's still elements there. There needs to be some skepticism. There needs to be verifying results, understanding that, you know what, sometimes DUAEs go outside their underwriting authority, or maybe the insurance carrier has a misunderstanding as to what the DUAE is contracted for. So those situations still exist today. And I think part of the reason why we introduced the performance assessment methodology into the marketplace is to capture some of that, to try to differentiate the DUAs among themselves. And so when we think about underwriting, as I mentioned before, it's one of the key components within the performance assessment methodology. You score up to 10, and you can see the framework here where it goes from exceptional 10 down to weak 2. So yeah, so some of the elements that we look for in trying to assess underwriting capabilities is underwriting results. What we want to do is get a better understanding how the DUAE has fared from a loss ratio perspective, also from a premium perspective over a 5-year period, if it's been around for that long. We want to understand what competitive advantage the management feels that they possess versus other DUAs who may be operating the same type of lines. What type of data and analytics proprietary to that company exists, and how does that translate into an underwriting competitive advantage? What we want to better understand is commission structures, not only the base commission structure, but we also want to understand if there's profit commissions. So again, when we talk about alignment of interests, profit commissions become a huge conversation point around that. For DUAs that do have claims authority or claims settlement ability, talk about the claims management. And again, experience of underwriting staff. We talked about organizational talent, and just like on the credit rating side, where there's going to be some bleed over between the building block assessments, such is the case on the performance assessment as well. I mean, you can't just say organizational talent and limit it to that bucket. That kind of crosses over into experience of underwriting staff. So we want to get a better understanding of the underwriting staff, how long they've been on board with the DUAE, the industry experience, what designations that they might have within the industry. And then participation in profit sharing. I think Corey mentioned that as well. Is in some cases there is some participation there. So we want to get a better understanding of that as well.
Thanks. Before moving off of the methodology, Greg, are there any other key elements of the criteria that may be of note to the audience in terms of process?
Yeah, I think we talked about the methodology, we talked about the key components, and what I would say is there's a lot more information within the methodology itself to go over the specific fine details of the components. So maybe for the purposes of these couple minutes, just really focus in on the process for producing best PA for DUAEs. And again, for those familiar with the credit rating process, this follows the same sort of parameters on the performance assessment side as well. Obviously, we look at different factors. Obviously, it's not a credit rating. We make that quite clear. It's an opinion. It's a performance assessment, not on the credit worthiness of the entity. But the process flow follows that, what we do on the credit rating side. So if you think about gathering information and talking to management to get a better understanding of the results. So basically, we would do that. We would have a management meeting with the DUAE. We would also collect information through what we call a SPAC document. It's a supplemental performance assessment questionnaire, where we get a lot of information around the financial performance of the entity, along with the performance of the programs within that entity. Then we would do the analysis, and then we would develop a proposal. That proposal would then go to a performance assessment committee. The performance assessment committee would come to a decision. That decision would then be relayed to the management of the DUAE. And then the management of DUAE have the option to make that public or private. If it is made public, what we would do is issue a performance assessment report. If it's to remain private, then what we would do is just keep it private between AM Best and the DUAE itself. Just like on the credit rating side, there can be outlooks associated with a performance assessment, whether it be positive, stable, or negative. And the DUAE can be placed under review. So if there's a material change in the operations of a DUAE over the interim 12 months before we do the annual review, we could always place the DUAE under review to get more information around the event. So if there's an acquisition of a DUAE, if there's poor results, management changes, all those could be something that would trigger under review. Just like on the credit rating side, there is no termination period. We continue to surveil the DUAE throughout the 12 months. And if a DUAE wants to withdraw a performance assessment, what would happen is that AM Best analysts would do one final performance assessment and then withdraw it. So again, a lot of this process mirrors exactly what's on the credit rating side, the difference being obviously the factors that we look at.
Thank you. That's helpful, Greg. Now, David, shifting back to the MGA market itself, can you comment on how COVID-19 may have impacted the MGA market?
Yeah, definitely. I think, when you look at it, the initial hardships from the pandemic, they cut a swath through the industry and affected, they affected the insurance industry industry-wide, but just the whole the economy, not just in the U.S. obviously, but globally. What we did find, though, is that both traditional and InsurTech MGAs during that time period were able to actually, see where there were opportunities and develop those opportunities and start new programs. So that, again, that was something that even during that time of upheaval and that time of, hardship, again, that was felt by everybody, that there were some opportunities that the MGAs and DUAEs overall were able to develop. So there was no real systemic slowdown in terms of access to business, but we did find that there were, it hurt everybody, the hardships that impacted everyone, and it affected the MGA market as well. What we did find was that some DUAEs were insulated from the worst of what happened from pandemic standpoint, the worst of the financial distress, specifically those DUAEs that weren't focused on the programs in those areas that were most critically impacted, most acutely impacted, which, were obviously the service industry, hospitality industry, travel industry, things of that nature. So DUAEs that did have programs that were in those areas, they definitely felt it and they were definitely impacted. But again, some DUAEs that were focused on the other programs did not and were not as acutely impacted from that standpoint. So I think, again, in terms of just providing what they need to provide and providing what they provide to the marketplace and to their reinsurance and insurance partners, I think this particular aspect of the insurance industry was able to go on and actually come out of it fairly strong, from an overall perspective. One of the difficulties coming out of COVID-19, and we talked about the talent internally within within these DUAEs and how they work and how well they work with the companies, but in terms of starting new relationships, and like I said, there were new programs that were started, but the difficulties in a remote environment in terms of onboarding of these new relationships, I mean, that definitely created some difficulties. I think we've all in these last couple of years gotten more and more comfortable out of necessity in the new remote marketplace where we're interacting, be it in conferences, be it in just internal meetings and what have you. We've gotten better, but in terms of lacking the face-to-face interaction at the time that you're just initiating these programs, at the time, again, that you're onboarding these programs, that, was definitely more difficult, for the DUAEs in developing these relationships, especially if they were new relationships, new companies, new insurers or reinsurers that they were working with. So again, that was a difficulty, that we've seen and something that we continue to look at as we're analyzing and doing our performance assessments. And that's something we'll continue to look at going forward. Definitely one of the other things that we saw COVID-19 have an impact is also on the enhanced scrutiny of overall policy wording. A lot has been said obviously about diving into business interruption and how that wording, how those contracts are going to play out in terms of claims that were being made, and a lot of that is still going on in the courts now. But a lot of what that causes a lot of scrutiny on policy wording, from an overall perspective, and I think we've seen that kind of heightened, and I think that's something that we'll continue to see as we go forward in terms of something that is part of the new normal, if you will, coming as we try and put COVID-19 in our rearview mirror.
Aon has done studies globally, and I wonder if you, Corey, can talk about the U.S., and which is what we focused on with our report, but also what can you say about growth globally?
Yeah, sure. If you could bring up the first slide, please. Yeah, so globally, we continue to see the growth as well. And just like the US, there really is no perfect source of information. So it really comes from our global network of colleagues. But US, as you can see on this chart, is still the dominant global player with roughly 60% of the overall MGA market in our perspective, which would be around 100 billion US dollars. Other key markets for commercial insurance include Germany, the UK, Canada, Australia. And it's interesting, Canada has an MGA market association, which represents about 85% of the MGA firms in Canada. And they've actually seen a growth of over 20% in 2021 over 2020. And some of the growth has obviously come from rates that have been taking place in the market, as well as some organic growth rates as well. But really the market in Canada continues to be skewed a lot more towards the commercial lines to personal lines, like 3-to-1, more in the commercial lines favor. What's also interesting to note is obviously Lloyd's and Lloyd's cover holders is a key capacity source for many of the geographies. In fact, the US is the largest in Lloyd's for cover holders, writing about 6.4 billion of premium in 2020. But I think there are about 145 cover holders in Australia, less than that, about 33 in New Zealand. And even the Middle East and Turkey is still relatively small, but has around $200 million US of business in the Lloyd's channel, but has also been growing at about 10% a year. So outside of developed markets in Asia, for example, the MGA market there is relatively small, but talking to a lot of our folks, right, they're very optimistic for growth and really focusing again on these specialized or niche products that have technology as a driver. So overall, as you can see here, obviously the US is the largest market, but we continue to see favorable and growing segments in other jurisdictions as well.
Thank you. And Greg, you've been leading discussions on DUAEs with many insurers as well as with DUAEs themselves. Are there particular regional differences in terms of origination or motivation for these DUAEs?
Yeah, I mean, if you think about it, U.S., as Corey just showed, U.S., U.K., Australia, they've been around for a while in terms of the MGAs and kind of how they've been important in the insurance market in those geographic locations. So, and I think the motivation is pretty uniform throughout the MGA development. So basically, some of the things that we talked about earlier about getting niche expertise, geographic expansion, line of business expansion, I think that's been pretty uniform as to what's driving some of the growth in MGAs throughout the world. What I would say, obviously, you have the Lloyd's in the UK and in the US, but then you think about what has taken place that might be a little bit different in the US, for example. So you think about, and it's not directly related to MGAs, but you think about the growth of fronting carriers and how that's taken place. I know part of the reason why my team is leading the performance assessment is we've done a lot with the fronting market and the hybrid fronters. So we have an insight into that relationship with the MGA or the DUAE. And what we've seen is an increase in the number of fronts. And that's been taking place now for 2 or 3 years. And it's really to maybe satisfy, at least in part, satisfy the need for stable capital or a stable capacity for those MGAs. So I think that as more MGAs continue to enter the market, you also have those fronting carriers who might be able to provide capacity through the reinsurer. So I think that's an outgrowth of what's taking place right now. And I know we've alluded to it a couple times now with the InsurTech. So we've seen a lot of InsurTech MGAs created, whether they become full stack carriers or not. Some have gone that route. Others have remained in the InsurTech MGA space. So I think those are maybe the 2 biggest outgrowths of what we've seen. But in terms of the overall motivation, I think, again, it's been pretty uniform for the reasons to enter the MGA market.
Thank you. Corey, both COVID-19 and now inflationary pressures may continue to maintain the momentum on both pricing and loss costs. What are some of the key things that MGAs need to be aware of in a dynamic environment like this? And what lines are seen as attractive to MGAs or DUAEs? And what are some of the lines that may have some headwinds due to these market conditions?
Yeah, and I think it's probably one in each other. In other words, I think a lot of the attractive lines right now that we're seeing actually have a lot of the headwinds too. And I'd say we're easily seeing most of the opportunities coming from the non-admitted market. A lot of this is with cyber, for example, both with new MGAs and existing MGAs. We've seen a lot of demand for property business, again, non-admitted and typically cat exposed like wind or flood or wildfire. So these both have a lot of headwinds, but in the markets, we're seeing, lots of rate and quite frankly, lots of opportunities. In other areas like excess casualty and umbrella, where we've seen a reduction in limits offered and premiums increasing, and just really creating a lot of market opportunities and really some resiliency with MGAs. The reps and warranties market has been growing, particularly in the MGA space, and still has been performing very well. And professional liability, I think we've seen some very niche segments there and products offered recently. We spoke a little bit before about commercial auto. And again, this is an area that has faced scrutiny, quite a bit of headwinds over the past overperformance. But we continue to see a lot of rate coming into the marketplace and, obviously hopeful for improving results. But again, another line where MGAs have a considerable market share in that commercial auto space. But without a doubt, though, I think that we'll find, although we're talking about some pretty broad segments here or broad product lines, I think each of the MGAs are really going to typically have, kind of a specialized niche like we've talked about, or a distribution source or underwriting edge, really, that can help them make these product lines profitable and make a great opportunity for the market.
Thanks, Corey. And David and Greg, in these current market conditions, what concerns AM Best?
Well, I think, I'll take the first shot at this. I think, some of the concerns we talked about, and I think we've brought them up in some of the answers that we've had to some of the earlier questions, but I think when we talk about the level of capacity that's available in the market now, we talked about, again, whether it's, private equity, insurtech, there's a lot of people that see opportunities available through MGAs and DUAEs. And so what that's created to some extent has been, a little bit of a churn in the marketplace. And what that generally means is that, accounts that might be with one carrier for 1 year and then switch to another carrier the next year, maybe stay for 2 years and then go to another carrier. So again, that is to be expected in a highly competitive marketplace, but that level of churn, what that does is that it kind of takes away from the long-term relationship that I've spoke about earlier in terms of the DUAE and the insurer and reinsurer, developing that relationship over time so that they can cultivate what is exactly needed by the ultimate customer, who's the policyholder in that particular niche. So again, that's something that we'll continue to look at and just kind of see how that plays out. Again, the volatile, economic conditions, and you combine that, that we've seen in the last couple of years. You combine that with the what we call the great, resignation of 2021. What that could do is challenge DOEs, maybe those that don't have depth from a staffing standpoint or a solid pipeline for new hires, if they were to lose important people within their organizations. We talked about talent and we talked about how important it is. And again, as Greg outlined, that's one of the key considerations when we're looking at, or when we're doing our performance assessments. So that's a challenge that DUAEs may face, especially, like I said, those that don't have depth in staffing or the solid pipeline kind of ready to take on those new challenges. Just in general, coming out of, and again, this is prospectively talking, but trying to come out of COVID-19, whatever's going to be the new normal, whatever the new normal conditions that we're going to be dealing with, insurers, reinsurers, and our distributors are going to have to sort of deal with whatever those conditions are and sort of, how best, what kind of best practices will help companies and their partners on the distribution side be successful on a going forward basis. So I think that's something else that we'll continue to look at, and that may have continue to concern us. Obviously, you spoke earlier about inflationary pressures and what that could mean to DUAEs from an expense standpoint, and can they keep revenues at a level that kind of match whatever you may see in terms of expense increases to maintain solid results. And then, like I said, just the influence of new capacity I mentioned earlier. What does that do to the discipline in terms of risk selection and adequate pricing for DOEs and for their carrier partners, in terms of how they're attacking their business and the decisions they're making in a marketplace that could get more competitive again with the new capacity. So some of those things are some of the concerns that we're looking at for MGAs and DUAEs in the current market.
Yeah, in taking a look at this list, I agree with each of these. Just maybe add a little bit color around maybe the great resignation and organizational staffing. Yeah, it is a concern, especially obviously for some of the smaller DUAEs, but we do have in-depth conversations with those companies, talk about a succession plan. So what happens if the leader of the organization moves on? Or so even with those, we need to better understand, okay, what takes place in the event of this. So I would say yes, that's been on the radar, and when we talk about key person risk as well. I think also with capacity, it's always about capacity. I think as we think about some of the things that could go wrong. So if for some reason a DUAE had capacity with a program writer, but a new management at the insurance carrier comes in, they don't want to be in a program business anymore. That's happened time and time again. So we need to better understand what are the what's the game plan if you do lose capacity, and we also take a look at their track record. Have they lost capacity in the past? Have they been able to replace it relatively easily? Because again, especially on the admitted side, if you lose capacity and with the carrier, then there's a lot of frictional costs, frictional work that needs to be done, which could hamper the relationship, not only obviously with the carrier, but also with the insured and the retail agent if they are working with the retail agent. So again, it is about capacity. So we need to better understand, do they have a bullpen of capacity providers in the case one does exit? And again, as I mentioned before, we do look at a track record to understand, okay, have they been able to do that successfully in the past?
Great. And David, I'll follow up with you on this. Innovation is something that AM Best has certainly focused on as having a positive impact on the industry, even so far as to include it in our BCRM, our credit rating methodology. So how would you say innovation is influencing the MGA or DUAE marketplace?
Well, I think, what we've seen, and I think from the standpoint of the MGA and DUAE marketplace, and one of the things I think I mentioned at the top, how they're becoming more important and more impactful in the marketplace is because they have been at the forefront of a lot of new product innovation. And I think we've seen that in terms of, obviously, they're partnering with their insurers and reinsurers. We've seen as some MGAs, again, being involved with InsurTech. And I just think some of the newer technologies that we've seen come to the marketplace and be able to enhance the overall insurance buying process for, again, the ultimate client, the policyholder, and also just how some of the technology has just impacted and helped the overall process in terms of the structure of the relationship with the insurer, and how, from an operational standpoint, how efficient that has been. I think we've seen that, and we've seen these distributors and these distribution partners be able to bring bottom line profitability to their insurance partners. So I think we've seen that be a key benefit in terms of innovation that has been brought to the marketplace from the standpoint of the DOAEs. I think, like I said, just streamlining the overall insurance buying process, for whether it be for homeowners or whether it be for personal auto. I think those coverages has obviously led to greater efficiencies, and again, key, looking at the ultimate customer, that's led to more customer satisfaction for the policyholders. And that's something, again, that we've seen as a very positive aspect of innovation and what these entities are bringing to the table. And I think, overall, we've talked about helping their insurance partners gain access to, to clients and to markets that they hadn't been able to do through different kind of digital, advents or other technological advancements. I think that's also, creating more opportunities in the marketplace. And again, it's just something overall, it's a strength that we've seen as part of the DUAE overall market. And I think that's, again, something that we'll continue to see probably show up as a strength as we continue and do more and more of our assessments going forward, as we get, more and more intimate in terms of understanding and deeply understanding this overall marketplace.
Corey, as you work with MGAs, how have you seen them evolving with not just technology, but process and product innovation as they try to maintain their relevance in this changing marketplace?
Yeah, sure. Without a doubt, we see MGAs as being very nimble. They often lack the red tape or bureaucracy, and therefore can move quickly on new products and or processes. If you can pull up that second slide, please. So I think a perfect InsurTech is a perfect example of this, right? So we noticed that in 2021, for example, we saw nearly $16 billion of investments into this area. And over the past 5 years, about $35 billion. Now, as you'll see from the chart, about 48% of this funding has gone to the areas focusing on distribution. And then you can also say that kind of blends into, right, the product design or development and pricing and underwriting. So just a large amount of those things going into those certain areas, right? So again, lots going into distribution. You'll see many of these names that you may have recognized. But again, these are some of the larger innovators and many publicly traded and well-known, but continues to be, and I think we'll continue to see it. Can we bring better products? Can we bring better innovations, better customer experiences, and efficiencies into the marketplace? As respects efficiencies, one of the things we're looking at is, can we take off on traditional processes and streamline them further? For example, are there quicker or more efficient ways to write small account E&S business that may fall outside of a typical wholesale binder, for example? And we're seeing people who are now targeting this area, which will have a great growth opportunity. But a lot of other examples. Again, it's an exciting market segment, and Aon here is positioning for growth.
Now we're coming to near the end of our time together, so I wanted to invite all of you to take a minute to put together some final thoughts. I'll start with the gentleman in the studio to ask them to comment, but and then follow up with Corey. But if there's anything that I might have missed that you wanted to add at the end of this session, Greg?
Sure, yeah. In terms of closing thoughts, what I would say is by AM Best introducing this methodology, the performance assessment methodology, I think it signals that we expect the MGA market to continue to increase, the number of MGAs continue to increase, and the overall importance of the DUA market will continue to increase. So I think that's the performance assessment methodology. That's what we expect to happen. It makes sense for us to enter this market. Now, as MGAs enter the market, they're going to have varying degrees of abilities, of expertise, and the ability to service the insurance companies and other partners. They're also going to have different readiness or different levels of readiness to confront some of the obstacles that we talked about today. So what we're trying to address is, okay, we're trying to differentiate those DUAEs to say, okay, to the market, here are the DUAEs that we feel can perform better from an underwriting perspective, or have better depth and breadth of relationships than others. And again, in a market that has limited public disclosure, I think will be a great service to the overall market in the insurance industry.
And Andrew, I think from my perspective, I think I'd probably go back to before I was with AM Best, working as an underwriter and working with MGAs and kind of seeing how things have transformed over that time. We talked about the fact that we will continue as part of our performance assessment, kind of making sure that from the standpoint of DOEs and insurance companies within their relationships, that the DUAEs are, maintaining what they should be doing, and from an underwriting and pricing standpoint, utilizing and applying the authority delegated to them in the correct fashion, maybe avoiding some of the things that we'd seen over 20 years ago. But I do think we've seen so much transformation in the marketplace, and I think the relationship between MGAs, DUAEs, and their insurance and reinsurance companies, their partners, is so much more transparent. The fact that technology has come so far in that time, I just think it's in some ways it's the same relationship, but in a lot of ways it's different and more enhanced. And I do think that the best of the MGAs and DUAEs that are working with the insurance companies now can avoid some of the old problems and really take a chance to continue transforming what is truly a dynamic kind of marketplace. People may not look at insurance like that, but it truly is. And I think MGAs and DUAEs are part of the transformational aspect of that marketplace and part of the dynamic aspect of that marketplace. So I do think things are a lot different than what they used to be, and I'm interested to continue seeing how they develop on a going forward basis.
As am I. Very interesting sentiment. And Corey, as our guest outside of the studio in that nice bright day outside, I wonder if you'd like to offer the last word for us.
Yeah, first off, let me conclude by just saying thanks for having me here. I really appreciate it. And I think, we talked about a lot of things. I think we all agree on just the growth and the traction that the MGAs have in the marketplace, which is fantastic. I think we talked a lot about talent, about, the processes that you will be working on. And I think to me, that's probably one of the more interesting things is, AM Best has a long history on the rating side of insurance companies. And obviously that does have impact from time to time on the carriers. So I'll just be really interested to see really kind of the impact from your new assessment, how that focuses on the delegated underwriting authorities, as well as insurance carriers, and how those all kind of wrap into the industry. So looking forward to your process, and we'll go from there.
Thank you, Corey, Greg, and David, for sharing your thoughts and your time. And thank you to everyone who's tuned in to listen. This is obviously a meaty and interesting and exciting topic, and I look forward to us exploring it more in the future. Thank you.